Hello, friends. Welcome back to the monthly pyramid portfolio update as of Sunday, February 1st, 2026. As usual, I hope you find the information in this video useful, but disclaimer, please note that this is not investing advice. It's just my portfolio as it stands today and it can change at any time without previous notification. Following an investment strategy without doing the work yourself is almost guaranteed to result in losses. So please be careful since it's your responsibility to do your own research before investing. At the end of the video, in the bonus section, we will talk about the concept of targeted portfolios and give you some examples. But first, let's start with the usual look at this month's activity. In terms of buying, I did participate in a share capital increase for BVB, the company that manages the Romanian stock exchange, and, as usual, did not sell anything this month. In terms of cash flow, I only got a small quarterly dividend from the S&P 500 index, but the cash position at the beginning of the year was strong, very strong actually, so there are no problems there since we also need to take into consideration that throughout this year, I will also have a significant number of bonds and bank deposits reaching maturity, so cash flow should be steady and consistent in 2026. That being said, the portfolio as of February 1st is currently looking like this. Please pause the video if you want to analyze each investment in more detail. As mentioned in the disclaimer, this should be only for informational purposes since the allocations can change at any time. And finally, the current pyramid allocation portfolio after the first month of 2026 looks something like this. We can see that crypto continued the downslide, but we had a pretty good month in commodities and value stocks. Overall, the portfolio was up 3.28% for the month, and being the first month of the year, it represents also the year-to-date return of the pyramid portfolio. This is exceptional, taking into consideration the fact that all markets, stocks, commodities, crypto, corrected significantly in the last two sessions, so I think so far so good. Keeping our fingers crossed. Now, before going to the next section, if you are interested in the subject, please leave a like and subscribe to the channel. It really helps bringing this completely free information to more and more people. As mentioned at the beginning, in today's bonus section, we will talk about the concept of targeted portfolios and give you some examples as well. By the end of last year, I was seriously pondering to make these videos rarer, maybe once a quarter or whenever there was something important happening, because focusing too much on it leads to hyperactivity on the account, which I don't want. But in the end, I decided against it, for the moment at least. However, to mitigate the overtrading, I started focusing on other side projects, so I created two dummy targeted portfolios, meaning I did not invest any money yet in them, but created just to track their performance over time. So, what is a targeted portfolio? Targeted portfolios are investment options focused on a specific theme and are designed to help investors achieve specific financial goals and are usually somewhat concentrated in a sector or technology or geography, etc. I got this question in my mind in 2022 when ARK Invest funds were down 60, 70, 90% or whatever. Who in the right mind would invest in such a fund? And after a little investigating, I found that they are actually, or at least they should be, a small part of a larger portfolio that allows you to participate in the eventual upside of a thesis. In the case of ARC, depending on the specific fund, either technology or biotechnology or something else. So, targeted portfolios are specific portfolios typically categorized by risk level, ranging from very aggressive to conservative, and are selected based on an investor's risk tolerance and investment objectives. One characteristic, unlike regular age-based portfolios, target portfolios do not automatically adjust their assets allocation based on the beneficiary's age, allowing investors to maintain a fixed allocation over time. Of course, the allocation changes when the thesis changes or when somebody needs the money. So the plan was to create two dummy portfolios of 10 or so assets each, which I will be presenting today. And the first one is called moonshots. A moonshot is an expression describing a big ambitious goal that breaks new ground, coming from the moon landing, which in 1969 was a quote-unquote crazy project. This portfolio contains high risk, high reward bets, mostly includes assets from the growth stocks and ARR level in the pyramid portfolio. Here, we can find companies that focus on innovation in different domains that show a promise of growing exponentially in the future, like AI, biotechnology, space exploration, quantum computing, self driving cars, robotics, etc. You can see the tickers below for now. One thing to note is that we invest only in public companies, so we exclude some that would have been on the list, like SpaceX, OpenAI, etc., but are currently private. This list is currently very much a work in progress, so I won't be getting into the individual companies, but you can research them and see the thesis for yourself. Now, there is one notable exception: Robinhood, ticker Hood. Why is it on the list? It's not in AI or space or robots. However, I think it might be a representative of a trend that is the future, but I can't name it yet, with two major potential upsides. The first is the change in consumption patterns of the young generation, which are called, for lack of a better description, an increased propensity to gamble. And Robinhood, with its prediction market, can increase its business, and also, I know I will get some hate for this, even the actual act of investing is to some degree gambling, since you put money in stuff that you don't have a 100% degree of certainty that you will get back your money, or ideally more, but you can make sure that the odds are stacked for you, not against you. And the second major trend of potential upside in Robinhood is tokenization, meaning people will want to own a small share of anything and everything. For example, private companies, pieces of art, sports team, etc. The second portfolio is called the serial acquirer portfolio, and serial acquirers are companies that drive long-term growth and shareholder value primarily through repeated mergers and acquisition rather than relying on organic growth. This includes more value stocks, assets than growth. These companies typically buy smaller, niche, often family owned businesses with strong cash flows and durable market positions, acquiring them with minimal integration to preserve their entrepreneurial culture and operational independence. Sometimes they can add operational efficiency, like use the same general departments for, let's say, HR, accounting, etc., and if possible, produce synergy between the subsidiaries. This portfolio, as opposed to the Moonshots one, is close to its final form, so more relevant, I think, than the first one. While this is still a work in progress, I created a document. You can see the link in the video description, which I will update monthly and follow how these two and potentially other portfolio strategies will fare in 2026. So, the main contrast between the pyramid portfolio and these types of portfolio is that the pyramid portfolio is a holistic portfolio which can contain multiple targeted portfolios if we so desire. This targeted portfolio transfers the responsibility a bit, but you basically become a manager of portfolio managers. As a side note, this is usually what most family offices do. We can integrate in the pyramid portfolio custom strategies, like, for example, following Gen Z consumer trends, which basically switches the focus from ownership to renting and from things to experience. For example, Uber replaced the personal car, Airbnb instead of a second vacation home. Delivery companies made the kitchen from a must have to a nice have, etc. They did the study that such a strategy overperformed the S&P 500 112% to 87%. Unfortunately, I'm not sure over what time period, but I assume that it can be found out pretty easily. Another strategy that overperforms is consumer companies which have a lot of followers on social media, meaning the products or services are really popular with end users. I hope you get the idea here, which is not really to copy the moonshots of the serial acquirer strategies, but to define your own for whatever you think will overperform. Anyway, that's it for today. Thanks for watching this video. I hope you found it somewhat useful. And if you did, please don't forget to like and subscribe. See you next month. Have a great day.